Thank you, Diane, so much for coming on. I am so glad to have you talk about the back end of your business and how to set up things for your finances. I'm going to pin you to my screen. I think that'll help for the recording purposes. And we just have a couple of notes here that we were planning on talking about. There were so many things that we wanted to cover, but Diane, if you want to just go over like those basic three things that we talked about, and then if you have time, maybe we can get into some more things. But the purpose of this call is to not overwhelm anybody. We're going to keep it nice and simple. So it's just like the bare minimum of when you start a group or when you start a coaching business, what do you need to know?
So, hello everyone, and I'm glad you all have decided your new entrepreneurship of being a coach. It's amazing once you decide what you want to do, but to coach others, and then there's always the business aspect over your head. I'm not an accountant. I'm a coach. I don't know what to do, so I'm here to help you. Today is the official first day the IRS has opened up their portal for electronic filing for any tax purposes. So,
Great.
Megan, you picked the perfect day to talk about taxes.
Woo!
All over the news, it's all over the internet. Um, your focus should be earning money and making money in your business and getting your business to grow. How does an accountant or an accounting coach help you grow your business? The number one tool I tell all my clients is to have some sort of software to help you do that. Whether you are good at an Excel spreadsheet, um, or any type, there's several different types of software out there. The number one software our firm recommends is QuickBooks Online.
Mhm.
And the reason being it's been on Wall Street, uh, worldwide, most small businesses use QuickBooks. It's used by Intuit. Intuit is their product developer, and I'm sure you've heard of Quickened, Intuit, QuickBooks, and it's taught at the colleges and universities across the nation. It also is across the world because if you're dealing with anyone who has foreign money or foreign changes, it's it's in every different currency as well. So that's number one, is to get the proper tools to start to work with your business. You're always the first thing an entrepreneur or coach will go out and do, and they'll get their business cards. Well, if you're going to design your business card, you want to design a product that's going to help you run your business. And the goal is to know how much you're making every month and what your cash flow is. Um, There are several different types of companies you can form. There's a sole proprietor, which is a simple Schedule C, which reports on your personal taxes. That income, the income minus your expenses, that bottom line is taxed at an additional 15% to encompass self-employment tax.
Which is like
There is an out.
yeah, like essentially when we're actually going to go over like the way that I track my numbers, but it's really great to have QuickBooks as well, like just as a way to do that. And this is the ways that you can like register yourself, right? This is, you can be a sole proprietor, there are different ways that you can like file. And that's what Diane was just saying, is that like if you file as a sole proprietor, you get a lot of like you get taxed a lot. And it's kind of like this interesting thing that I didn't realize. Like, you would think as a sole proprietor, that would be something that you would want to file as, but I think, and I've heard it from other coaches as well, that's not what we would recommend. Feel free to do whatever you're looking to do, but that's what we're thinking as well.
Right. The other type of company or entity you could form is what is called an LLC. An
Mhm.
LLC is a limited liability corporation. Um, if you are a single member as a limited liability and you earn you're not earning that, your bottom line income is less than $40,000, it's okay to report it on your 1040 tax return, and it files just like a sole proprietor, but it gives you some corporate legal protection. So if a person was going to come sue you, they would have to go to the LLC first before they go to you personally. So I would like you to draw a little target on your piece of paper, and in the center of your target would be your, you could draw a picture of a target. The center of your target would be your S Corp.
Okay.
I mean, not your S Corp, I'm sorry. It would be your 1040 tax return, and that would be you personally, and it would be your social security number.
Okay. I'm trying to see if I can
I
insert.
see Megan trying to do that.
It's like I'm trying to like
I
figure out
like
a
to
way that I
just
can
draw
go.
it on a piece of paper. So,
Yeah, I'm like,
um,
how do I insert a
picture of a target.
yeah, I'll do
The
it.
center of the target would be, yeah, if you could just insert this picture of a
There we go.
target, the center would be your social security number. There you go.
Okay.
The center would be your social security number, and that would be you, and that would be what a sole proprietorship is. So consider all the opposite rings. You are the target. If somebody decides to sue you, they hit you first.
Yeah.
You're the bullseye.
We do not
What
want
an LLC would, right, the LLC would be that first layer of protection, which is the grayed out area, the second level, or the white one, either or. That is an LLC. It provides you a level of protection. And you get what is called a tax ID number. That tax ID number, when somebody sues you, they have to sue that tax ID number before they hit you to your personal social security number. So that's why we like to set up LLCs, because then you are not the main target. Now, the single member LLC reports on an individual tax return and is subject to self-employment. So both layers 1 and 2 are subject to self-employment tax, which is that additional 15% that we spoke about at the beginning.
Yeah. Okay.
The
So
third layer, right.
sorry, I just want to make sure because this is important. So we want to do quick. So the first thing we want you to know is have a digital bookkeeping system. That's number one. And QuickBooks is $50, I think, a month. And that's a great way to do it. And the other thing is that
Right.
I'm not sure if anyone here has made actually over 40K this in 2022. I'm not sure if anyone in their business has made that. So you said it's okay to report that under what?
Under as a single member LLC, reporting on your personal tax return as a Schedule C. So that's a lot of verbiage.
Yes, I'm like trying to make sure I get that right. But I just want to make sure that like they know that like I don't think anyone is going to need to worry about doing this for 2022. I double checked and I was like 90% sure no one has made over 40K in 2022 that doesn't already have an LLC. This is more so for 2023. We're letting you know that you're going to need to and have a digital bookkeeping system. We think that'd be great for you. And if you are making, you'll hopefully be making more than 40K in your businesses this year. And that's why you want to set up that LLC is what we would recommend. And you want to make sure that you are protecting yourself with that LLC so that if someone for some reason would sue you, which is unlikely, first off, you have that contract. We also talked about getting Hiscox insurance. So that could be another way that you can like protect yourself as a business owner. And then you also have the LLC. So there are like we've got contract, we've got legal, and you also have LLC. So it's a lot of different ways to protect yourself. Then Diane was also mentioning the self-employment tax, making sure that you guys are setting aside money for your taxes for 2023 and for 2022 as well. Like you should have some money set aside, but we're going to get into that as well. I just wanted to make sure How was that for a good,
So it's, I think it's helpful. That's great. What we want to make sure is that the reason why we say anything over $40,000 a year, you would have to pay to have another set of taxes, which is what we're going to get into is the S corp taxes,
yep.
an S corp tax return, and that it costs money for accounting purposes to generate that S corp tax return, and there's a few more steps that have to be involved.
Mhm.
So with the cost of the accounting of a second tax return, K-1s are generated. Um, the difference between the amount of tax you pay versus the processing of the tax return is not worth it.
Yep, it's
It's
just
just better to pay the tax.
yep, and that's why we're like, okay, it just would make more sense, and I don't think anyone will have to do that. I'm 90% sure that no one will have to do that, and the only people who might have to do that are people who are contract coaches, and that would be, and they've already handled their taxes because they've been contracting for the past 4 years. So both of them have that set up. That's Deb and Sarah. I think you'll be good, but everybody else, you're good for this year. We're totally good. We're just getting you set up so that, like, I've been asking Diane like a million questions all the time, and she's been very, very helpful at like answering them. So that's a really good reason why having an accountant is really helpful. But I would also like make sure that you, um, because you were
The
able to,
accountant usually, right. So that's a good point, Megan. The accountant usually doesn't handle multiple questions if you're a single member LLC because it's time consuming. So everybody's time is valuable and they have to consider it. So I wanted to talk about the third layer of protection, which is the S corp. The
and
third layer of protection is when you folks are making more than 40,000, which hopefully won't happen.
very,
The the Yeah, it would be the outer ring, probably. I'd move it
yep, I'm on.
where you put there. So it'd be the outer ring. So if you take an arrow, it has to go through the outer ring, through the center ring before it hits you. So that provides you an additional layer of protection. And with the S corp, in order to file as an S corp, if you've already got your LLC set up, you have to file two more IRS tax return tax forms and get approval from the IRS to be an S corp. And it's IRS form number 2553 and 8830. I think it's 8839.
Okay, let me,
8839. Yeah, 2553.
okay,
And let me make sure it's 8839. All the numbers are pretty close to one another, so I want to just double check.
mhm. And the only person who's filing for taxes outside of the US is Sarah. She's
It's
Canada
8832 and
88.
IRS form 8832.
Okay,
So form number 2553 lists the reason why you want to change. Form number 8832 is what is called an entity classification form, and it's basically telling the IRS, I've been running as a single member LLC and reporting all my income on my 1040. I would like to become an S corp. That form has to be filled together. These two forms have to be filled together, and it has to be filled within the first 90 days of the year. So the IRS doesn't let you go the entire year and say, oh, oops, I made more than 40,000, so I want to change my filing status. They make you decide the first 90 days of the year.
yes, and you
Okay.
actually did this for, I'm pretty sure, didn't you do this for me?
I did this for you, and yes, when I saw that you were getting ready to tip the edge of the
Yeah,
scale,
Like, "Oh, no."
I was like, Megan, we need to change you.
Yep.
So, but the only way I'm doing it is I'm looking at Megan's personal taxes, I'm looking at her business taxes, and I'm looking at where she's at. And that's why it's important to have an accountant to assist you. Your two best friends are going to be your accountant and your attorney. Your attorney is going to keep you out of hot water, and your accountant is going to keep you happy with the IRS.
Yes. And I know, like, probably at this point over 1,000 coaches. I've never heard of anyone ever getting sued ever. So that's a great thing. You don't need to worry about that, but it's just a good thing to have in mind. Always a good thing, you know?
Well, the accountant is looking over your shoulders and saying, have you done this? Have you done that? We can't practice in the state of North Carolina. There are many accountants that have what is called a CPA JD. So they hold both licenses, but you can only practice one. So you could either be a CPA or a JD, which is an attorney.
Okay.
The deal with nicety about it is the classes we both take through our college and career. We have to study both business law, and it's not just one course. I think it's 3 or 4 courses.
Yeah.
So we learn it, but we can only practice one or the other. So the nice thing about the accountant is the accountant says, I know you're breaking the law. I don't want you getting hot water, see Jane down the street. So let's make sure we do this right.
Yes.
Okay. So we kind of work together, and then those that don't and get themselves in hot water, we say, you need to go see Jane down the street.
Yep. And you're like, okay, we got this. But I think that like I've never actually heard of this Target like analogy before, and it just makes so much sense as to why like we've done the things that we've done. I'm learning here as well with you guys, but understanding that when you are setting yourself up as an S Corp, it's very important to do. And I'm really glad that we're doing this within the first 90 days of the year. Like, I think it would be wise for you to set up. Are there any downsides to having it to file as an S Corp if you are not making 40K?
Well, the downside is you have the cost of another return. That's the downside. And you have to wait for the K1s to get done. There's a lot more benefits with the S Corp.
Yeah.
For one, my major. Go ahead. When you want to, if you folks are all in the coaching business, so you are your primary thing that you're selling. You're not selling widgets, you're not selling cotton gins, you're not selling anything. So when it comes down the line, if you want to get out of business and sell the business, you have to provide training to the next person.
Okay.
So that's the difference. Like we like to, S Corps and LLCs are generally, they're professional businesses. We have real estate agents that do it that become, it's the tax savings is the big plus side of the S Corp.
Can you tell them what kind of cash savings they would have?
Well, say we're working at $40,000 and your bottom line is $40,000.
So let's say you make 40K in 20.
That's $6,000 worth of. We say $6,000 worth of extra taxes that you have to pay. On the 1040 tax return, you do get 50% of it given back to you, so that's a $3,000 additional tax.
So it's 3% or 50%?
Well, on the tax return, the self-employment tax is $6,000, and you have to remember what is self-employment tax. Self-employment tax is the Social Security and Medicare tax that you would normally have taken out of your W-2 if you were an employee.
Okay, so this would be
Okay?
typically taken out if you're working for someone else.
If
Out.
you were working for someone else, it would be your Social Security and Medicare tax.
Okay.
Now, that is both the employee and the employer's tax,
Okay.
the 6,000.
And
So out of your W-2, you would only see 3,000 of that come because half of that. So on your personal tax return, you do get a $3,000 credit because you're only getting charged the employer's portion of the tax.
okay, so this is
Okay.
just an example. It's the 6K for the self-employment tax. That's typically for the employee or employer tax. That is a percentage. So you're saying it would be 6K of the 40K. How much is the self-employed? Isn't it like 15%?
Well, 15 is the total of the employee-employer portion.
Okay,
So divide that by 2.
gotcha.
Right. So, but we say the reason why we say 15% is because it's added and then taken, half of it's taken back. So you asked me what self-employment tax is. Self-employment tax is 15%.
Okay.
Okay.
So in a self-employment, I just want to make sure that everyone's good on that. Because that's something that like I've been learning about this year, and like making sure that you're saving money for taxes. So like, and we'll talk a little bit more
Now,
about taxes in a second.
now that is not your only tax.
No,
Okay.
you're
So
gonna save way more.
that's the deal. That's an additional tax. So say your income is $40,000 and you're at the tax bracket income of 20%.
Yeah.
You're gonna multiply that $40,000 times 20%. That's your ordinary tax.
Yeah.
And then you're gonna add that self-employment tax.
Okay. So I'm just gonna move this down a little bit. So so essentially you would save more with an S corp because it would take half of because you would only have to pay
That's
half of that. Now, this is just for this one.
ordinary tax, ordinary income tax.
Gotcha. Okay. So I'm just gonna move this like
There's 2 different taxes. There's ordinary and self-employment.
MSA.
Mhm.
Yeah. It's like also there might be people on this call that are like, duh, Megan, but I am asking all the questions because I'm like, I don't know these things. And if I don't know, I would make sure that every one of my clients knows. So it's like there's ordinary tax and there's income tax. So this is gonna
No, ordinary is ordinary income tax. Just put
oh,
a dash, not slash.
gotcha. And
Ordinary tax is income tax. It's just your basic income tax.
perfect.
And then there's self-employment tax.
Okay, so this is good. S corp helps you with your ordinary income tax or the self-employment tax.
Self-employment.
Beautiful. Yo, I'm figuring it out. Okay, great. Okay, so this is one type of tax and this is the other type of tax. We'll talk about both of them.
Yeah, so you have to remember you're taxed on 2 levels, self-employment and ordinary,
Gotcha.
as
Okay.
a business owner.
Okay.
Mhm.
I feel like that's pretty, and I'll just put that. I'm just trying to think about like where I can put this. I'll say like, I'll put it here. Taxed on 2 levels as a business owner. So, employment and ordinary.
The first one should be ordinary tax, which is your regular tax rate, and the second should be self-employment. Mhm.
Ordinary/income / self-employment tax. And
Mhm.
self-employment tax. Beautiful. Okay, so let's talk about self-employment tax. So it's 15% of what you earn. Is it always 15% or is it 15% up until like a certain tax bracket?
15% of what you earn.
Always. Okay, great. So even if you're making,
Income minus expenses,
okay,
what your business earns, not because people can earn W-2 wages, they can earn interest and dividends, several incomes.
perfect. Okay. So we've got the
Mhm.
self-employment tax. It's 15%. It's going to be income minus expenses. That earn equals income minus expenses. Correct?
Just for the business, yes.
Just for self-employment. Great. Okay. So you've got that tax. That's money you want to be setting aside. And we'll talk about like how you set aside money in a little bit. But like, if you think about it, if you make $1,000, right? Let's just say like for every person that pays you like $1,000, you want to be putting aside 15% of that $1,000 just for self-employment tax. That's just like a way to think about it.
Right.
Okay. Now ordinary or income tax. What about that?
Ordinary and income tax is just your tax on your regular earnings. That's tax on W-2 wages, it's taxed on dividend income, interest income.
These are words I don't fully understand, but maybe other people. It's like, I'm like, interest.
Does anybody know what, I mean, I want to ask the group, I don't want to talk about things that are not necessary. So,
Yeah.
I mean, dividend earnings, does everybody understand
Most
that?
people know ordinary tax. It's mostly the self-employment tax that is the big concern.
Yeah, so that's it.
We'll just leave
And
that.
there's not a whole lot, you're right. So S corp earnings falls under ordinary income.
Beautiful.
And that's why it's not taxed at the self-employment rate.
Which is great. Okay, beautiful.
It only gets ordinary tax, not an additional tax.
Beautiful. Okay,
That's how you avoid self-employment tax.
great.
You could probably put self-employment tax under self-employment tax. You want to put sole proprietors and single member LLCs. But with that, we know that's by the target that we just made.
Right. So it's like this is sole
examples of self-employment tax would be a sole proprietor, filing Schedule C, or an LLC, single member that has not elected to be an S corp.
Okay. And so what I'm just gonna say or I'm just gonna keep that, but like I'm an LLC and an S corp, right?
Yeah, you're an LLC that has elected to be an S corp.
Yep. Are you guys feeling good about that? Like, so I have filed as an LLC, which is that middle tax part, that middle that we were talking about. So like, there's me, and then I filed as an LLC and as an S corp, and that's what we're recommending that you do. You don't have to do that, but as you can see, if you aren't filing as an LLC, or if you're just filing as a sole proprietor, you're going to get taxed on that with your self-employment versus I don't get taxed on that. Okay. I think that's pretty good. Now, how much money on average should they be putting aside for the ordinary income tax? That's at different brackets, I know, but like for them, how much money should they be setting aside for that for maybe 2023?
Well, that's a good question because I don't know everybody's
Yeah,
status.
let's say
So
between zero and 100K.
Well, see, if you're between 0 and 100K and you weren't an S corp. There's a whole tax table on the IRS website.
Okay, perfect.
So your ordinary tax rate, if you're married or single, that
Oh,
all falls
okay.
under,
So
yeah,
should I say
yes,
like
those are the tax tables.
where? Okay. Is there a simpler one anywhere? IRS.
Well, you have to go to IRS website.
Okay.
Go to irs.gov.
Okay. Just so
Because
you
it
guys,
changes every year. The tax rates change every year. So you have to, if you're looking at 2022 taxes, and search and say tax tables. Table, Table.
huh. Okay.
There it is.
Yeah, because there's lots of different pieces of that. So let's see here.
Yeah, there's a lot of different pieces.
Okay, so yeah.
So that is the tax table. Mm-hmm.
Jesus. Okay. So
Yeah.
it's a lot, but I think that we were saying like what would be like the most conservative idea.
So generally people fall under the, excuse me, generally people fall under the 22% because the tax brackets are 10, 12, 22, 24, 32, 35, and 37. Those are the tax brackets
Can you say those one
of
more?
percentage.
So you said
10%, which nobody falls under 10% because you have to earn less than $10,000 a year. So
Okay.
unless you're a student.
Yeah. And I think that some of them probably, that might have been what their businesses made this year. That's why I'm listing it. It might have been like 10K. Because everyone in here, except for a couple of people who have just left their jobs, have other jobs. So their business as a whole.
Are these people, is mainly everybody single?
No, we got a mix.
So we have different rates for married, single, and head of household. So they really need to look at, I don't want to
we were
say these are the brackets.
Like, okay, so we'll just say
there's a 10, there's a 12%, a 22%, a 24%, a 32%, a 35%. And then if you're making over 35%, you just better say 50% to the IRS because it's then another level of craziness.
Wait, and how much are you making? How much would you be making? That's like 2 million or?
No, actually it's, when you get to that level, it's 500, married filing. Yeah, a single person is 340, which is not hard for people to make these days. So, the IT folks and stuff that we work with.
So you said that's 35 and 32?
35 and 32, no. It's different for each.
Yeah.
I don't want to list it. You really need to.
Have to check if you're single or married.
Single, married, head of household.
Do not take this verbatim.
Yeah, because that's just a lot.
But what I think they did at the life coach school, they said to just put 40% aside for taxes, like, which is a very like.
Well, the reason why they say 40% is because this is only the IRS side, so the extra 5% goes to the state.
Yep. So you got.
So they're figuring 35 for the feds and 5 for the state.
Yeah.
And they're being
important thing.
Yeah.
So for every $1,000,
if you're in California, you might as well raise it.
Yeah. So that's yep. And actually, I do think that someone's in California, aren't they? I think not in this group, but as my one-on-ones, I have someone that will watch this. So that's just a heads up. But yeah, this is why we recommend that. Can
Yeah,
we,
that's why they recommend it. They take worst case scenarios, and it's better for you to keep money, than to have to struggle for taxes. That's
exactly.
the worst case scenario.
Well, and that's actually a great segue into what happened. And I mentioned I love like being an example for you guys. And I think it's really important that you like know that I'm not perfect by any stretch of the imagination. Diane knows this very well. But for me, one of the most important things that I realized this year was that I was not saving that because I was not making much money last year. Like I made 47, no, not much money. I made 47, which is a great amount of money. It's huge. But because I wasn't making as much in 2021, I did not plan for this. You want to plan for this. You want to be setting aside money for this every single month. I would say now this year I'm starting fresh and I'm going to be setting aside money every month to make sure that I'm ready for my taxes because things can change pretty drastically. Diane and I have been talking about my numbers, how much they changed, like going from 47 to 120 was unexpected. And the jump this year is probably going to be like higher as well. And we're not getting into payroll or anything like that, but it's one of those things that like, just keep in mind, save 48% for taxes. And making the other thing that we wanted to talk about that's really, really important is having a separate account for your personal account and your business. So what happened to me and can happen to you guys as well as you decide if once your business is making good money, and I know many people like Demetria, I know you guys are leaving your job soon. So this is something that like to keep in mind. Carrie, you just left your job. So like something to keep in mind for this upcoming year. I had all of my money from my business go. Well, first off, I had an account as a teacher that was set up at State Employees Credit Union. And then when I started my business, I opened up an account at Mechanics and Farmers Bank. And when I was teaching and coaching, I had money that was just coming into state employees. That's how I was paying my credit cards and things like that. And then there was just kind of like a pot that was building at Mechanics and Farmers for my business account. What I did not do, and Diane told me to do, but I didn't do it until like October of this year, is I had enough money that I had saved up in my state employees account that I didn't really need to pull for my business at all. Like last year, like I was doing, or in 2021, I was doing great. And then the funds from my teaching, because I had left teaching, were not there anymore. And so I started going into my business account to pay for my credit card and my personal things. You never want to do that ever, because what happened is I was saying that my business was paying for like going out to dinner or things like that, it was not for business purposes. It was just for me just going out to dinner with friends. And what you need to do is all you need to do, it took like 2 seconds, call up your bank. And if you don't have a banking account yet for your business, I know some of you guys don't, get one this week. Like get one is not this week, but like as soon as you can, start a separate account for your business and then have that account. If you're only making money from one source, separate it into a personal account. And I'm just going to say, just have two accounts. Whatever you decide to do for your business, have a personal account as well. And I find it's helpful to do with the same bank because I can just like transfer funds from my business if I need to pay, like do things like that. So
Wait, Megan, can I ask you a question? Did you say, so at the not state employee bank,
yes, Mechanics and Farmers.
you had two accounts, you had a business account and a personal account?
Yes. So when I started my business, what I needed for like my taxes and my LLC and the number that I put on for like Acuity, QuickBooks, Square, some of you guys have Stripe. I used my business account for Mechanic and Farmers. And I was just paying out of that business account for my personal things instead of separating into a business account and a personal account at Mechanics and Farmers.
Yes, you should have a business and a personal account at the same bank, so you could transfer funds.
Yeah, because that's
But you want to keep all your business income and expenses in the business account and all your personal in your personal.
And
Mhm.
then obviously like you spend the money that you make on personal
Right.
things, but are you saying it like looks better on paper when you're
Doesn't look better on paper. If the IRS were to come and audit you, they're gonna pull your business account and they're gonna see all this personal money and personal stuff, and they're gonna say, nope, nope,
Mhm.
nope.
And that was the
Okay.
problem that happened to me this year is I was like just paying for things out of my business account. And I was like, yeah, because I didn't have any other like I didn't have any funds anywhere else. Does that make sense? Like I
But
like
what if you're transferring like from one
If
bank
you're
to another?
transferring, if a transfer is allowed, because then we code it as a distribution. The main thing is if you form that corporation or that LLC, you have what is called a corporate veil.
mhm.
You just put on your head, and it's basically saying, I'm going to oblige and follow the rules of a business and a corporation. If you don't follow those rules and you get audited, um, the IRS can see both sides of the street, even though you think they don't. They see, they're tapped directly into the banking system. So they see the money coming in and the money going out. If it doesn't reconcile or balance, as when you're reporting it on your Schedule C or your S Corp, the income and the expenses, they're going to say, this doesn't make sense. Because
And
I saw $50,000 worth of income come in her account, and she only reported on her tax return 20,000.
so like I think I'll just start like I'll do a separate video talking through how to do this word reconcile and balance. I know that can sound really confusing, but essentially what you do is in QuickBooks or some other sort of system, whatever you decide to get. I'll show you for QuickBooks because that's what I have. And that's why I haven't done my December yet because I'm going to actually do a video for it. So I've got plans, Diane. I'm ready. But what we do is you go in and every single thing that I have ever spent on my business credit card, I have to go through and say, this is for something. Like this is, I'm about to go to Cabo. So I bought a flight. This is my flight fund and I reconcile it. And it's like you just categorize everything. And then you have to pull up your bank account from your business account and you have to pull up your account from your QuickBooks and you have to go through and reconcile, which means that you have to match it. So you're like, yep, confirmed. I did this on this date. I paid for a lunch in Cabo. Like, it's like those kind of things are all going to happen. So making sure that you've got all those things listed. And then when you file your taxes, you're like, here, I promise everything that I made and everything that I spent in my business is legit. Like it is something that I legitimately did with my business. And what you hear about like tax fraud or tax evasion is where people are saying, oh, I only made like $20,000 this year, but they really made $50,000. And that 40% that we're saved for taxes, they didn't pay it. And like you could hear about like people like, and I would say that like, Diane, this is not like, this is more so in like the bigger scheme of things. But I think whenever you hear about tax fraud or things like that, you're like, oh my gosh, like how could this happen? And it's because they weren't keeping track of their numbers. They weren't publishing things. And I almost like accidentally did that. So that's why I was saying to make sure that you just have a separate account so that the IRS can see, okay, here we know Megan is doing everything she can on her personal and everything in her business. It makes sense. All the numbers are accounted for. There's no missing money anywhere. Does that make sense? Carrie, it's also, if you've got more questions, I'm going to include Diane's information. And if you would like to work with Diane, would that be a possibility?
Mhm.
Okay, great.
That'd be great.
Yeah, I was like, just to make sure that like, and Carrie actually
Yeah.
does live local. So she's in North Carolinian as well.
The one thing I want to mention, because we've talked about the LLC, the sole proprietor, and the S Corp.
Mhm.
One of the big rules of an S Corp, and we're not going to get into payrolls, but in order to be an S Corp, line 1 or 2 on the S Corp tax return is officer wages. Somebody needs to be paid. and
So,
we utilize,
mhm,
that's why, Megan, we set up payroll,
yeah,
was because we are checking the box to say that this is a legit S corporation and it has an employee and an officer that gets paid.
I
And we
remember.
utilize that officer wages. Mhm.
And so essentially what happened, and I told them about this as well, like how I was like, oh, like I accidentally said that I was gonna, I know I could be making up to 300K this year, but I'm making around the income of someone who's gonna make 100K. And so that was what I was talking about, like just a surprise expense. You guys are gonna do so much better because you're not gonna do these like, you know this ahead of time, you guys are going to set up separate things, but when you do payroll, that's something that is separate. And I'm just going to like italicize this and be like, what, and again, the income levels are very, very different, but I didn't do this until I hit over 40K. So would you say that like they don't need to worry about payroll until what income, generally, very generally, it's
40K, the 40K, right,
right
right.
here, you hit the 40K mark, talk to someone about doing payroll. And that just means like I pay myself. It's a very weird thing, but like I pay me to have my business. So kind of an important thing for you guys to
You
talk about.
become a W-2 employee of your own business, yes.
Now,
But that's what we as accountants utilize to get taxes paid in, so you don't have to do estimated taxes. If you didn't, so there's,
mhm,
and there's additional benefits for retirement
yeah,
and things like that, but we're not gonna talk about that right
we're
now.
gonna talk about that today. We're just like, these are like
Yeah.
if you just started a business today, something that even if you don't have an LLC or anything like that, good timing. This is time to set up as an S corp or an S
Mhm.
corp and an LLC. Now, something that is very, very important that we want to touch on is how to use me as an expense. And that was what Diane and I were emailing back. And I tried to explain it, Diane, and I don't think I explained it very well.
So Megan, you folks are coaching and Megan is coaching you. So Megan is your educational
Yes.
expense, continuing education.
Yeah. So like they were asking, like one of them, Dorit was saying that, and she messaged in, I think the text message, but what happened is her accountant told her to get a form from me and like a
A
W9.
W-9,
Yeah.
right.
And they do not need a W9.
Only if it's an S corp.
Okay.
Only if you're filing as an S corp. You should provide the W-9 and fill it out and check the box, but she does not need to. The purpose of a W-9 is so that their accountant can issue you a 1099, but S corps aren't required to receive 1099.
Hey, Rob. Sorry, give me just 1 second. So our TV just turned on by itself. He's not here. I was like, okay, weird. Sorry about that. But so the W9 tells your accountant that they can send me a form that's called a 1099, correct? And what is a 1099 for me?
A 1099, it for you would require that somewhere on your tax return, you need to report some income
Oh yeah.
received by this person.
Yeah, and so
But yeah, so it's not, anytime somebody asks you for a W-9, you just need to make sure you know how to fill it out properly.
which we
Because,
will talk about separately, like just in case, like for me
yeah,
and
that's a separate form.
yeah, most of us, you guys won't be an expense. I don't think like for anybody, there's no business I'm thinking of. If for some reason, maybe Sarah, because Sarah's also thinking about doing business coaching, but she's the one that's with Mexico and Canada. The rest are like weight loss, date coaching, like personal stylist coaching, breathwork coaching. So they would not be tax deductions for anybody else. So they don't need to worry about this. You just need to know that like I'm considered continuing education and I'm a tax deduction because of that. And so when you put like when I'm doing, and I'll show you guys when I do QuickBooks and things like that, but when I like if I were to buy coaching, like I was talking to you guys about learning how to hire a team, and so I might hire a coach to do that. I would put it as continuing education. Her $2,000, I would file it as continuing education, and then so Diane would know about that business expense. Demetria said, we don't have to issue you a 1099. You're just an expense for us. Correct. Yeah. So you do not need to issue me a 1099. You just say that I am continuing education and it's going to be a tax deduction for you. And if would there ever be a reason why their accountant would need to send me? I'll talk with Diane about how to do this W-9.
Most people, most accountants request them because they see that you're a professional fee and they have to do their due diligence and keep on their file the W-9. Because if they were to get audited, they need to say why they didn't issue you a 1099, and they pull it out and say, oh, I didn't issue her a 1099 because she's an S corp. So yes, please fill those out for your people. It makes the accountants on the other side happy.
Oh, okay. So I do need to fill out a W-9 for all of them.
It would be a good thing, yes, but what I usually do is get a blank one and keep it on file. So you just need to email it to them with your, and what that W-9 does is it includes your business name, your tax ID number. It checks the box that you're an S corp. You know that you're an LLC filing as an S corp. You have to sign it, and then they receive it and they look at it, and if their accountant pays attention, they won't send you a 1099.
Gotcha. Okay.
But if you do get a 1099, it's not a big deal because you're reporting the income.
Right. Okay, great. So I'll fill that out for you guys.
The main thing is you don't want that person to send you a 1099 in your name with your social security number. Protect your social security number. That's why we set up the LLCs.
Yeah, I'll send that to you. I'll send you it just to make sure it's correct. And then I'll send that to you. Yeah. Sorry, Dorit. I meant to fix that. So that's great. I know it is pretty much almost 3 o'clock. I'll include your information in there. But I think this covered like the basics of taxes and all that fun stuff. So thank you so much, Diane, for coming on. I know this was so helpful to everyone, myself included. And I'll show them how to do QuickBooks at a later date. Send them your email and information if they'd like to file with you. Is there anything else that you want to add real quick?
Yeah, Megan, you have been wonderful, the best student of mine. So I think you can help everyone with their QuickBooks or their, you know, we're happy to help. If you want us to do your taxes, we like to look at your last year's taxes to see what was done. And we're here to help. We file in all 50 states, so it's not a problem. And we do everything electronically. I have people in California, so we're happy to assist.
Awesome.
And I do a lot of the Google Meets to do training. My training classes for QuickBooks is $150 an hour.
Yep. And I did that and it was very, very helpful. So I think that would be great. I'll say that like $150 for QuickBooks training, and I'll try, and if I'll give that to you guys, but if you want to hear it again from Diane, she's definitely more qualified than I am. So if you want to do that with her, that would be great. But thank you so much for coming on, Diane, and we will get started with some coaching in like 2-ish minutes. I'm going to stop this recording and then start a new recording for our coaching call. But thank you, Diane, and we will I'll see you and be emailing you a couple my LL or the W-9 form and things like that soon.
Thank you.
Right. Very good. Have a good one. Nice meeting you.